Well, hello, everybody. Welcome. Today's our Tuesday webinar. We are talking about Cleveland. My name is Ben. I'm your host and your guide on this journey today. Today being May 7th, 2019. Thanks for joining us. So coming up next week, we're going to be doing Dallas. So we're kind of doing the same shtick as today. Tuesday will be kind of the intro on the 14th, and then Thursday will be the actual Dallas affiliate. And then, of course, this week, today is the intro kind of overview of Cleveland. And then in 2 days on Thursday, we'll have our Cleveland provider come on and talk all about it. And you need to have a strategy session with us before you're able to attend the Thursday webinar. So make sure that you try to get one of those in. If you're watching this today and you have not connected with us, it doesn't have to be a strategy session recently. It could have been 2 years ago, but you need to have connected with us. If you haven't done that, then you really want to do the Thursday webinar, you'll have to make arrangements to do that strategy session, and I can make that happen with you one way or the other. You just email me. We'll send you a link during this webinar, and I'll talk about that. But if all else fails, you can always just email me. My name is Ben, and it's ben@realwealthnetwork.com. Ben, B-E-N, @realwealthnetwork.com, and we'll make it happen one way or the other. Alrighty, our next live event. Well, first of all, let me just say we just did one. I just flew home yesterday, and we had a great event on Saturday. And I wasn't at the LA one, but apparently that went really well as well. So we're doing it again. Saturday, the 13th of July, we'll be in the San Francisco Bay Area. Sunday, the 14th, down in Los Angeles. And you know, the lineup is still kind of being formulated, but it looks like it's going to be, I think I saw Birmingham and some other things, but we kind of like to downplay because we don't know for sure. Things usually change, so we'll know what that lineup is pretty soon. And then on the 10th of August, twice a year we try to have an event somewhere in the eastern third of the country, just because it's so unfair to all of you coming to us from other parts of the country and the world, and everything we have is West Coast based. So twice a year we're doing it on the East Coast, and the one coming up is the 10th of August in Cleveland, Ohio. And that, for those of you who don't know, we call that our Eastern Showcase, and it is kind of like a massive one-day event. And we have as many affiliates from around the country as we can get. You know, we have 14 of them. Usually at least 12 are able to make it, depending on their schedule. So it's a really good kind of crash course to learn about all the different markets. So that's coming on the 10th of August. All right, there's me. Been doing this for almost 30 years now. Bought a bunch of stuff in Arizona and California. Did fix and flips for a while in Arizona, buy and holds in California, but a couple flips in California. Then I started buying stuff in Florida, and then I ultimately moved here, and I also bought some homes up in Cincinnati, which I still own to this day through my IRA. So I've got a bunch of stuff now, about 12 properties between Florida, Pennsylvania, and Ohio. Love doing it. It's fun. All right, so Real Wealth Network, there's Rich and Kathy frolicking on the Pacific Surf coastline. And we like to say we make real estate investing simplified. So you can create a passive income producing portfolio. And but anyway, we can help you create passive income and live life on your own terms. It's always nice to create other income streams that are coming in various forms. And you can't just rely on Social Security and rely on your job working forever. So this is a really good way of planting some seeds now for the future. And there we are, nice little picture of seeds growing into little seedlings, little plants coming out of stacks of coin. So a bunch of different reasons why Real Wealth Network. First of all, it doesn't cost you a dime. We're an educational network. We don't have a hidden agenda. We're not going to corner you when you least expect it and try to sell you a $10,000 rarefied program. That's not what we're about. It's mainly an educational network. But when you're actually ready to invest and actually do something, start building that portfolio of homes or syndication shares, then just you connect with us. You schedule yourself with a strategy session. We'll connect you we'll talk to you, figure out what your goals are, what your plans are, and how you really like to structure things. And then we'll connect you with one of our 14 affiliates that are property providers around the country. And none of that costs anything. It's just the way we make our money is if you do buy a property from Chicago or Jacksonville or Houston or Dallas, then that provider sends R.E.A.L Wealth Network a broker-to-broker finder's fee. It's pretty modest, but that's how we make our money. I mean, we're not doing this for charity, but we don't charge you, the member, anything to connect you with resources that we have checked out and done our due diligence on. So a bunch of frequently asked questions. We don't flip houses. That's not really what we do. We are much more buy and hold. I like flipping, and I'm sure a lot of our members do flip, but that's not what we focus on. Then talking about the money a little bit, I always like to go into this. If you're going to buy a property all cash, which not very many people do, but some people do, you'll need to have about $60,000 liquid ready to go. If you're going to use your IRA funds, you need to have about $50,000. And the reason it's 50 is because you usually get loans that are about 50%. So just going by the theory that if you buy a $100,000 property and you put 50% down, you'll need to come up with 50,000, but then you'll also need to have some reserves. The reserves do not have to be in the IRA, but anyway, that's why we came up with that 50,000 number. Most people, however, don't buy in IRAs, although I've done it and many people do, and it's a good way to get going. For those who don't have cash outside of an IRA, but they have a lot of cash inside an IRA, it's pretty much their only option if they want to buy property. Or some people, they've maxed out all the money outside of their IRAs, and they're like, gee, I've got 200,000 sitting in some mutual fund somewhere. Let me see if I can convert that over and use it within an IRA. But anyway, so IRAs are great for property purchases, but the majority of the members that I speak to anyway, they're buying outside of an IRA, just normal taxable cash. And if you want to do that, then there's a whole list of things that are ideal. They're not required, but ideally you'd have a credit score of 680 or above. Ideally you'd have 2-year job history. You don't have to. It just means you have to jump through a couple more hoops to qualify. This one's almost always true. You need to have 20% down, so liquid funds for 20% of whatever the purchase price is. 6 months reserves, a low debt to income ratio. In other words, if you make $10,000 a month, you can't have obligations of $9,000 a month. That would be a 90% ratio. No bank is going to lend to you if your ratio is that high. And then the final one here is, there's a limit of 10 homes using these conventional financing. But of course, I always like to point out, if you have more than 10 finance properties, you're probably not watching this webinar, and you probably don't need to be told that because you know. Okay, so here's our disclaimer. Nothing is guaranteed. You could lose money by investing in real estate. We do our best efforts, and we have a bunch of protocols in place to screen, review, and understand all of our different affiliates and what we're talking about, but we can't and do not guarantee the performance of those investments. You need to kind of, you're taking a little bit of a risk, although not that big of a risk, but you are buying a house. If a tornado hits the house, then you better hope you have insurance, right? So, I mean, it's not like a mutual fund where you just send your money in and it could go up and down, but it's really easy and really liquid to get out of. It's not as liquid, but the mutual fund could also lose 40% of its value. And so I actually think it's safer than that. But it all depends on your perspective. But all to say, it's a responsibility of you, the investor, to do your own due diligence and analysis before retaining an affiliate and buying a property. And we do require everybody to order an independent inspection from a licensed home inspector. That's something you always want to do when closing on a property. Costs about $300, $350, well worth it. And then also, if you are paying all cash, no one's going to make you get an appraisal. So you want to order an appraisal. If you're financing, you're going through a bank, then they will automatically order an appraisal. It's not something you need to worry about. And I will mention, if anybody watching this has any questions, feel free to just type them into the question box over here, and I will answer them if it comes to that. All right, so where are we? What markets does R.E.A.L Wealth Network have? Well, there they all are in the little red circles. And the blue star is the market that we're going to focus on today. But in the red circles, starting on going left to right, we've got Albuquerque, Dallas, Houston, then going north up to St. Louis. Oh no, I'm sorry, Kansas City, and then Chicago, Illinois, and then cutting down, we've got 3 different affiliate locations, property locations, markets, I should say, in Alabama. We've got Huntsville, Montgomery, and Birmingham right in the middle. Then we've got Atlanta, although that one, we don't have an affiliate right now in Atlanta, but that's going to change pretty soon, I predict. Down in Florida, we've got Orlando, Tampa, and Jacksonville. And then back up to Michigan, you can see you've got Detroit there. You've got Columbus right in the middle of the state. You've got Cincinnati, and then you've got Pittsburgh, PA, and then ending up at the Blue Star, Cleveland, Ohio, which is what we're going to talk about today. Why Cleveland? Their economy's growing. It's very affordable. We'll get into that with some line charts in a minute. And they've got really good cash flow and pretty good equity growth. I mean, I wouldn't count on it for an equity play. They're pretty conservative. Growth is like 2 to 3, maybe 4%. But there's neighborhoods that are going up a lot faster than that. And because you're getting the properties relatively cheaply, it's got great cash flow in Cleveland, anywhere in Ohio, frankly. The economy, it's historically been a real manufacturing economy, real industrial. They're moving away from that. They still got their foot dipped in that manufacturing pool, but they're becoming a lot more healthcare, research and development, technology, bioscience, and there's a little bit of a tourism thing going on. There's kind of a renaissance happening downtown. They're developing the lake there, which Cleveland as a city has never really capitalized on all their lakefront and riverfront stuff. So they're finally getting around to doing that. So things are looking up in Cleveland. You can see there's a bunch of companies that are there. I'll just be silent for a minute and let you soak in all the colorful logos. A lot of healthcare stuff. Leading biomedical, healthcare, and tech region. I know that our affiliate there buys a lot of stuff in, God, what is she? She has some name for it. I can't remember the name, but just basically this techie healthcare corridor. She buys a lot of stuff there that will appreciate much faster than some other areas, she predicts. But 170 high-tech and health tech companies, state-of-the-art labs and incubators, 90,000 students at HTC, $4 billion in development, 1,600-acre campus. There's quite a bit of stuff going on in Cleveland, actually. Major developments that she'll go into a lot more detail if you're able to attend the Thursday webinar, but $19 billion in aggregate development, top 10 cities in the nation for college-educated millennial residents. People sometimes give Cleveland short shrift, like they don't realize there's a huge Broadway. I think Shell says it's like the second largest Broadway area outside of New York, and a lot of employment in bioscience and healthcare space. So there's quite a bit of stuff going on in Cleveland, and it does really fly under the radar. 104K median home price. I mean, that's like a shack in many other places. A teardown. Ohio ranks first among states for affordability, second most affordable metro area in America, and top 5 best markets for real estate investing. So here's our nice little bar charts. It's essentially talking about the neighborhoods, RWN neighborhoods, meaning our affiliate in Cleveland, she doesn't buy everywhere in Cleveland. She's buying in certain neighborhoods. And those neighborhoods are not the scary, rough D neighborhoods, but they're good neighborhoods, but they're lower than the average metro area, because there's going to be some poshy areas that don't really cash flow much. Okay, we've got a question from Peter. Let me just go ahead and answer that. If I don't have 2 years of job history, yeah, you don't have to have 2 years of job history. It's just, we've got a lot of self-employed people that need to get financing, and the lender will ask you, okay, what is your income? How much debt do you have? And okay, and let's take a look at your tax returns. I mean, there's other things. If you don't have a 2-year job history, you're not up the creek without a paddle. It just depends on your data. It makes it a little harder to qualify sometimes. Okay, so back to the metro area home values. 103 in the metro area of our neighborhoods, on 129 in the overall metro area, and just look how much lower that is to the U.S. average. All right, cash flow and equity growth. So the average rent, so in other words, when you buy a house, there's this 1% rule that you may have heard of. It's always nice to buy a house for 100,000 and have the monthly income or monthly rent, the gross monthly rent, be 1% of what you purchase. So if you paid 100,000, that would be $1,000 a month. And it's really hard to find that. Especially like in Florida and Texas, it's more like the goal is more like 0.75%, maybe 0.8. But in Cleveland, it's still pretty close to 1%. You can easily get 1% too. Median rents nationwide are only, like I just said, 0.75% of purchase price, but in Cleveland, it's almost 1%. And there's a lot of equity to be made and appreciation of 4%. Now it says 14% in the city of Cleveland, but still at pre-recession pricing. So I think what that's referring to is some of these hipster neighborhoods, like Cleveland City, or oh God, what's it called? Something with city in it, like really kind of nice, close to downtown, but a lot of things going on. So they're going to be closer to the 14% rate. Most of what we see there is going to be a more conservative 4%. Still not bad. I mean, remember, you're making cash flow each and every month, so it's nice to have your underlying investment also increase in value to the tune of 4%. All right, here's our line chart. Equity growth, U.S. in orange, the neighborhoods, RWN neighborhoods in red, and the metro area, pretty consistent. The metro area is going up a little bit faster. So that makes Cleveland a good place to invest because it's not going up that fast. See how steady it is? Look at the red line from 2012 to 2018. Yes, it's going up, but not very fast, just slow and steady, which, from an investment standpoint, that's kind of what you want sometimes, right? All right, so let's get into some sample properties in Cleveland. These properties are not available now. These are samples that were available recently. On Thursday, our affiliate, she will be coming on and talking about a little bit of what I just talked about, but the focus on Thursday is really mainly about the individual properties and what properties she has for sale right now. So anyway, here's one, 3-bedroom, 2-bath, 1,440 square feet. I'll walk through the numbers on this first one, and then I'll be a little quicker on the following ones, but $145,000 to buy this thing. 20% of that is $29,000. We just took 10% of your down payment for closing costs. Just seems like a nice safe number. There are no rehab costs because by the time you, Mr. or Mrs. Investor, buy it, it has already been rehabbed, and that's included in that $145,000 purchase price up at the top. So your initial cash invested is, if you're in the column on the left, this is assuming you're getting financing. So you're going to put 20% down plus the closing costs, which add up to $31,878. Now your loan at 5.25% is going to be $640 a month. There's your taxes, $274, insurance, $50, property management. It's usually 8%. In this case, it is 8% of the rent. So you add up all those numbers together, your total monthly costs are $1,076, but you're renting it for $1,395, right? So that's a really good spread, $319. Now I will point out this does not include vacancy or maintenance. There's not going to be too terribly much maintenance because they've just rehabbed the property. There will be maintenance, especially like if a tenant moves out or whatever. Okay, the tenant moves out, and now you're going to have to do some rehab. Tenant moves out, and gee, you're going to have to maybe repaint a room or two and maybe clean the carpets if there are, but for the most part, there's not going to be maintenance. But vacancy, if a tenant moves out, you're going to have some vacancy. So what we recommend is that 3 to 6% of your rent, just 3 to 6% is what should be set aside for vacancy and maintenance. But if you don't set that aside, we've got a whopping $319. If you took 10% of the rent, well, the rent is $1,395, so that's $139. $319 minus $139, you still got $200, a little less than $200 as positive cash flow. So it's pretty good. Here's another one. I'll go through this one a little quicker. $99,000, and your rent is over 1% at $1,085. I could do without that color. My God, that's hideous. I would have gone with something a little sharper than a dull. Maybe this is a pre-rehab picture, or maybe that's siding and you don't paint it. It's siding and that's the color that they chose, and so you're stuck with it. But renters don't seem to mind you terribly much, and that's got a pretty good cash flow too, $261. So I'll just be quiet for a second, let you look at those numbers. And of course, the column on the right is exactly the same as the column on the left, except there is no loan. So you've got a lot more cash up front that you put out because you're putting it all out of your own pocket. But the cash flow is a lot better, $700 a month cash flow, because there's no loan to pay. All right, next one. Oh, I like this color a little bit better. 89.9, we'll call it 90K. Monthly cash flow 277. Yeah, you basically take the monthly cash flow of 277, multiply that by 12, and then take that number and divide it by your cash invested, which is 19,778, and that equals a 16.8% return. That's better. All right, moving on now. So if anybody has any questions, go ahead and ask me, and I will get to them. If you're interested in investing in Cleveland and you really want to attend, like you're like, gosh darn it, I really want to attend the Thursday webinar, then please click on the link in the email I'm going to send you. It's probably going out now to everybody who's logged into this, and it takes you to my calendar and you can pick a time. To be honest, I don't know how much time there's available this afternoon and tomorrow. Not very much. So if there's no availability, then I would highly recommend that you just email me and we'll figure something out. On the other hand, if you like Cleveland, but you don't have to attend the Thursday webinar this week, you just want to be given the green light to attend all webinars in the future, then go ahead and book yourself a strategy session for next week sometime. The crunch will be over, and we'll talk next week. Just kind of see if there's any questions, and there aren't. Oh yes, here's one question. I heard there are 6+ months wait times for Ohio properties. How does the queue system work? Okay, that is Cincinnati, Ohio. They do have a 6-month wait. Today we're talking about Cleveland, Nirav, and Cleveland does not have a 6-month wait. Now let me address that. They're both pretty equal. They're both really good cash flow markets. We've got a really good affiliate. We've got really good property management. Why is it then that Cincinnati has a wait and Cleveland does not? It's because we've been with Cincinnati a lot longer in our network. She's been around for like 8 years versus about 2.5 or 3 for Cleveland, and she's just got a kind of a cult following. There's just a lot of people. So Cincinnati does have that wait list, and we're getting a little off topic here, but the way their wait list works is you sign up with them, they put you on a list, and then when your name comes up about 6 months later, 7 months later, they will email you and they'll say, hey, Joe Bob, your name came up. And she actually has 3 different lists. She has a 1031 exchange list. She has a brand new investor to brand new, at least to her market list. And then she has a list for her existing investors. And that way, if you're an existing investor, you have 5 homes, you're not having to get behind everyone else. So she kind of just pulls equally from all 3 of those lists. So that makes it a little bit more fair. Cleveland does not have one of those, so there's no wait list for Cleveland. I mean, she doesn't always have properties. She'll get like 10 or so a month, and the demand is about 410 a month. So the supply and demand is pretty much in good check in Cleveland. Okay, well, that does it. We are done. If you want to sign up for a strategy session today or tomorrow, do so with the link or email me, and we'll get you in so that you can attend Thursday, or just sign up sometime next week, and then you've got the green light to attend all the webinars. All righty, thank you so much, everybody. Really appreciate you joining us. My name is Ben. I'm the Director of Investor Relations for Real Wealth Network, and we do this pretty much every week. It's not always me, but we bring a different affiliate by every Thursday, and we kind of primer it on Tuesday, and that's the deal. So thank you so much, everybody. Appreciate it. We'll see you again soon. Bye-bye.